Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets.
Ice raw sugar in New York. I've often mentioned how the bright green highlighted August 2022 to date uptrend, currently at 1913. How it did not act as much as a support or resistance, but more as a nuisance. Well, 5 weeks ago, this broken bright green uptrend, along with a darker green highlighted short medium moving average, currently 1895, managed to erode the bullish incentive enough that the upper time, currently at 1783 of the late February to early July bearish Andrews pitchfork, well, it capped the market. This also happened 4 weeks ago to a lesser extent, and again 3 weeks ago as well. Now, I drew this bearish Andrews pitchfork in hope it might provide some idea of the recent bearish angle of attack. I did mention at the time that I'd be happy to finesse this to a shallower bearish shift pitchfork for the same move if it became appropriate. However, last week's bullish actions put paid to both those ideas, and I'll be retiring this pitchfork after this commentary. I put forward 2 weeks ago that we might be undergoing a change of heart when I said in talking about the market, and I quote, "I do note that this has now dropped down under the previously mentioned bright green uptrend and the green short medium moving average, and thus has been liable to upward pressure. However, for the moment, we are still exhibiting lower highs, a keen bearish sign. But the lower lows have sort of petered out, and we seem to have some support at just under the 21st century absolute Fibonacci line at 1809. This support has been tested on and off since mid-May, and the room for maneuver is now so tight that either the support will have to break or the upper time by realistically the end of this week. So next week I might have something more interesting to say about all this," and that's the end of the quote. We've since had a changing gap move higher at the start of last week and a move back up over the green short medium moving average, as well as the mauve medium moving average, currently at 1905, and also the bright green uptrend. The rise has been so far up as far as the March 2023 low at 2004, but we've only seen a rejection there last Friday and today, I suppose, which, to be honest, could be long liquidation ahead of the long weekend in the US and maybe some trading going on today. So we'll be interested to see if the move higher resumes later this week. Now, I did put out there some 5 weeks ago that the action over since mid-April might be forming a possible double bottom. This pattern was and is not complete. I've stated over recent weeks that we would need to see how the pattern develops over the next few weeks, and I still stay by this point. I was very clear on the wording on this point 5 weeks ago when I said, and I quote, "Please note this is a potential for a double bottom, not a potential double bottom. The distinction between those two is very fine, but definite." And that's the end of the quote. Ice Europe white sugar in London. Mid-April, the market exited out and below a December 2023 to April 2024 descending triangle, giving a primary target in a 544.80 zone and a secondary much harder to reach target X1 down in a 497.60 zone. 15 weeks ago, prices moved down and reached the primary target via the means of a mid-April to mid-May bear flag. This activity in heading lower, much like New York sugar at the time, allowed me to draw a new pattern and speculate on other possible outcomes. Firstly, a start of April to start of July bearish Andrews pitchfork highlighted in purple on my daily chart. Market just over a week ago punched up and moved away from the upper time, and that's currently at 503.5. Much as in New York sugar, I've been hoping this bearish pitchfork might provide some definition to some of the recent bearish angle of attack, and I was willing to finesse this to a shallower bearish shift pitchfork with the same move if it became appropriate. Well, this week it was not only appropriate, it was needed, and I've done that finessing and drawn a bearish shift pitchfork in green on my daily chart for the same move as the bearish Andrews pitchfork. However, I've kept the purple bearish Andrews pitchfork on my daily chart, and I'll explain why shortly. First, I wish to emphasize once again the monthly key reversal down in July, which has seen some activity until 2 weeks ago towards the downside. However, it has been limited there. The final idea put out there 5 weeks ago was to perhaps regard the action since mid-April forming a possible double bottom over the last couple of weeks. As my phrase implies, this pattern was not complete, and I recognized 2 weeks ago that time was running out for this idea. It was, as I said back then and since, and I quote, "Please note this is a potential for a double bottom, not a potential double bottom. The distinction between those two is very fine, but definite," end of quote. Despite the rises we've seen last week, and I think this idea is, despite the rises we have seen last week, I think this idea is now dead. This just leaves what to do with the purple highlighted bearish Andrews pitchfork. So 3 weeks ago I said the following, and I quote, "I noted within this purple bearish Andrews pitchfork a new pattern, pattern within a pattern, like a Russian doll. It's an early July to date bearish channel. I've outlined the lower bear channel line in bright red, currently at 456.40, and I utilized the purple upper tine, currently 503.5, as the upper bear channel line," end of quote. At the turn of 2 weeks ago into last week, prices punched up through this bear channel, thus giving us some opportunities on the top side. Primary target X would be in the 516.90 area, with the secondary target X1 up in the 599 even area. The high last week of 599.30 came awfully close enough to register as having reached target X, but I'll still leave it on my daily chart for definition. The only other feature I'd note is the crossover of the purple upper tine and the green middle tine later this week at the price of 497. Such crossovers sometimes presage a period of volatility, so watch out. Sugar white premium spread. I've previously spoken here some while ago now, but at length, about a big picture item seen here on my weekly chart. We have the recurring big old bullish Andrews pitchfork from 2019 to 2021, highlighted in dark blue on my weekly chart. The lower tine, currently at 147.75, tested, breached, and now broken on the downside. 20 weeks ago, the market made a huge combined weekly key reversal down and bearish engulfing pattern. I suspect this was in large part due to the London sugar month changeovers, but it nevertheless set in motion a lower market, though prices took their own sweet time in getting down below the lower tine. So, we are now, again, testing the lows of early to mid-October last year, down in the 115.75 to 116 even zone, indeed, where we have been the last 5 weeks. This is the next support zone, though when prices were down here back in October last year, they were at the same time just above the dark blue lower tine, which we are not today. Hence, though we have been held up here for a while, this support may not be as strong as seen back then. But I'll give it some time and see. Overhead, we have the two 50% Fibonacci lines of the July 2019 to September 22 move at 131.25, and the August 21 to September 2022 move at 128.75. Looking below, there are lesser Fibonacci lines further down at 107.75 and 104.5, but I am not sure how good these are. The next support of note would be the lows of the first week of February 2023 at 83 even. Then the mid-February low at 83.75 and the early February low at 81.75.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.